Good morning, Earth. It's Tuesday morning, March 25, 2025, and I'm your Sunil Thakker of Sunny Talks Money. Welcome to ST Money 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. Markets gripped by anxiety about an all out trade war got relief from signs the coming wave of US tariffs is shaping up as more focused than the barrage President Trump has occasionally threatened. The president twice on Monday signaled trading partners would receive possible exemptions or reductions. Investors welcomed the latest pivot on tariffs on Monday, with the US set to limit the range of import levies it introduces next week. Trump has said he would impose tariffs to match those aimed at the US by trading partners, plus duties on imports in sectors such as autos and pharma starting on April 2. But the planned reciprocal action looks set to be more targeted than originally thought. The administration has narrowed its focus to about 15% of nations running persistent trade imbalances with the US, dubbed the Dirty 15 by Treasury Secretary Scott Bessent. Meanwhile, the sectoral tariffs are now unlikely to be announced on April 2. Though the measures under consideration still amount to a shock to world trade, they fall short of the worst case economic scenarios investors had been girding for. US stock benchmarks started the week solidly higher, with the tech heavy NASDAQ composite leading the way with a 2.27% rise to 18,189 points. The S&P 500 rose 1.76% to end the session at 5,767 points. The broad index inched up last week, snapping a 4-week losing streak, partly driven by uncertainty caused by President Trump's trade policy. The S&P 500 has recovered about 4% from its recent low on March 13, and it remains down around 6% from its February 19 record high close. Meanwhile, the Dow Jones Industrial Average rose 1.42% to 42,583 points. The domestically focused Russell 2000 index rose 2.55% to a 2-week high, while the CBOE Volatility Index, known as Wall Street Sphere Gauge, dropped 1.8 points to 1-month low. A gauge of the Magnificent 7 mega caps gained 3.4%. 10 of the 11 S&P 500 sector indexes rose, led by the consumer discretion up 4.07%, followed by a 2.1% gain in communication services. Tesla extended a rally that started on Friday, surging 12% in its biggest one-day gain since early November, recovering some of this recent steep decline, helped by optimism about scaled-back US tariffs. Amazon and Nvidia added more than 3%, while Microsoft and Apple turning in more modest increases. Advanced Micro Devices jumped 7%. Investors scooped up battered technology shares, sending the Philadelphia Chip Index 3% higher. Dun & Bradstreet climbed 3% after the data and analytics provider agreed to be acquired by private equity firm Clear Lake Capital in a $7.7 billion deal. Lockheed Martin fell over 1% after Bank of America Global Research downgraded the weapons maker to neutral from buy. The 10-year Treasury yield advanced 4.33%. Yields had fallen in recent weeks on expectation the Federal Reserve will cut rates further than previously thought this year. The Fed reaffirmed its expectations for 2-quarter rate cuts this year at its March meeting. Crypto stocks rallied with a 4% rise in Bitcoin prices, while MicroStrategy surged 10% and Coinbase added 7%. The dollar spot index was little changed. West Texas Intermediate crude rose 1.4% to $69.23 a barrel. Spot gold fell 0.5% to $3,006 an ounce. Several companies have cited tariff uncertainty as they lowered their forecast for upcoming quarters. Data as of Friday showed earnings of companies in the S&P 500 expected to grow by 10.5% in 2025, down by 3.5% percentage points since the beginning of the year. A survey showed U.S. business activity picked up in March, while growing fears over import tariffs and deep government spending cuts continue to weigh on sentiment. New PMI data showed U.S. growth accelerating in March thanks to an upturn in services. Investors are now awaiting data this week, including the Personal Consumption Expenditure (PCE) price index, Federal Reserve's preferred inflation gauge, on Friday. And that's the wrap for today, my dear viewers. And if you got value from this, please do subscribe, like, and share this video as much as possible. You can contact me on at st@st-money.com for any further information. I'll see you again tomorrow morning. In the meantime, happy investing, stay inspired, and remember, it's all about money.